All right, listen up. You're probably not gonna believe me, but I found a simple trading strategy that uses 2 indicators that made over a 500% return. I'm gonna show you the trades that the strategy took, and I'm gonna show you how you can actually trade it in the real world. The setup for this trading strategy, really simple. We're gonna need the RSI for entries, the EMA for the trend filter, and lastly, we're gonna need the ATR bands to determine our stop loss. When the RSI crosses above 60 and the price is above the EMA, we go long. This is a long strategy only. I tested this on the Swiss franc versus the JPY 30-minute time frame. Let's see what happened. Here are the results. Amazing, right? 582% return with only a 30% drawdown. This is really impressive considering that we also have fees on. And the reason this works comes down to one thing, and that is the risk to reward. Every winning trade is bigger than our loss. That's the key. Because we cross over the momentum line, we are effectively using the RSI as a trend indicator on a trending market. Really important. Here's a perfect example. The RSI confirms momentum, price stays above the EMA, and the trade runs. But here is the problem with this trading strategy. In choppy markets, the RSI keeps flipping back and forth and you just get chopped up, and that is the nature of this trading strategy because we are using such a short RSI length. If you have any suggestions on indicators you use to avoid these choppy conditions, let us know in the comments, please. Here's my honest take and what I do not like about this strategy. Firstly, there's no time filter, so you may have to wake up during the odd hours of the night, enter and exit trades. Lastly is the RSI length. It's kind of too small, which results in a bunch of losses in some cases, and that leads to a high consecutive loss rate. So, if you can handle those 2 things, I think this strategy is perfect for you. Given this information that I've shared with you, how is this trading strategy still performing so well? It's because of our 6-to-1 risk to reward ratio. You don't need a high win rate, you just need a few big winners. Secondly, we move our stop loss when the trade goes in our favor. Alright, it's time for the big reveal. I'm going to give you the exact results that you can use to achieve this strategy. Set your RSI to the length of 7 and set your RSI middle band to 60. This will tell us when we should enter a trade. Next, set your EMA to the length of 9 and only enter if we are above the EMA. For my backtest, I use the open price to ensure the actual trade results have integrity. Your ATR indicator should have a length of 10 and a factor of 2. The stop loss should be set to the previous ATR value upon the counter entry. Do not trail the ATR stop bands. And your take profit, that'll just be set to 6 times the risk of whatever your stop loss value is. So that's all I have for you. That was a really simple strategy that I actually showed you that worked. I guess the last question here is, would I trade this strategy? Yes, I would trade it. However, only in a certain market. It has to be a trending market because this is a trend following strategy. I specifically chose this market because it gave me good results. So before you do any other market, I would recommend backtesting this. If you just decide to take the strategy on any market, you could potentially lose money. And always remember that past performance isn't an indicator of future results. Happy trading.